Holy smokers, this ain't no dang jokers. I have so much good news for everybody in this video here today. It's just action-packed with good news. I feel like Oprah back in the day when she was like, you get a car, you get a car, you get a car. Oh man, I got good news for everybody today, okay? First up, I got good news for humanity, humans, okay? If you're an AI bot out there, it might not be good news for you, okay? Second thing is we're gonna discuss in this video here today is good news for bulls on the stock market. People that are bullish on the stock market, the longs, I have some very good news for you, some major developments here that I gotta share with you. Third thing we're gonna get into, some good news for AMD shareholders. If you're an AMD shareholder out there and you're watching this video, I got some good news for you guys, okay? Good news for EL shareholders, Estee Lauder, and then I got some good news for cake shareholders as well, okay? So we got good news all over the place. It's just good vibes here today. I appreciate y'all joining me as always. One thing only I need from you guys. If you could do me one positive, if you could do me one good news, please smash the like button on this video, hit that thumbs up button. That's all I need from you, okay? That's all I need. If you want to be subscribed to the channel, you can certainly subscribe. We got a lot of subscribers on the channel, okay? A lot of subscribers, okay? Additionally, if you're looking to apply to your own private stock group, you need access to my entire library of premium courses like Become Master Stock Market, Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, access to my private Discord chat, exclusive weekly videos from me, all that good stuff, plus 1000xstocks.com. Pinned comment down there here today. Click on that, fill out a form, see if we get you access to that a little later on this week. Let's get you up to a much higher level, okay? Alrighty, so first up, good news for humanity. Then we'll get into the good news for the bulls on the stock market, and then AMD, EL, and cake, okay? Here it is. So, supposedly, Russia and Ukraine will immediately start negotiations toward a ceasefire and end the war. Now, can't get too excited over this, because you never know, maybe it's a year in the future and this war is still going on. But this is a positive development in the right direction, which is what all of us as humans should want to see. And this actually does affect money as well, outside of just the human casualties that we're about to go through and everything. It does actually affect inflation numbers, the energy market, things like that as well, okay? Now, in terms of the loss of life, it's been a huge number. I mean, just since this has started, they estimate around 12,000 civilians have lost their lives. I mean, you think about 9/11. If I recall, 9/11, which was a huge deal, obviously in the United States of America, we still mourn that day to this day. You know, nearly 25 years later, right? I think around 3,000 civilian lives got lost, right? Which is still far too many. But I mean, we're talking about in this situation 12,000 plus. You know, maybe approaching 15,000. And then as far as Ukrainian military deaths, it's estimated at 60,000 to 100,000 as of right now. As far as Russian military deaths, they estimate that at 185,000 to 260,000. So there's been a big loss of life, right? Which is not what we're going through. Additionally, you have this. Russia has a lot of nuclear warheads. I think everybody that knows anything about, military anything, right? You know that Russia's loaded with nuclear warheads. And so it's never comfortable feeling being a human and being on the same planet here with a country that's in a major, war, right? With that many nuclear warheads, like you just never know what could happen. It's not a comfortable feeling. And so the faster we can get this thing wrapped up, the better it is for honestly everybody involved, which at the end of the day, when you talk about a country that has that many nuclear warheads, everybody's involved, right? Now, if you want to talk about this even to another level, right, it does actually affect CPI numbers. It does actually affect the energy markets. It does actually affect the global economy. Because keep in mind, when we had that insane amount of inflation in 2022, it was really on the back of three core things. One was the stimulus, the government stimulus, everything that, all the money they were pumping out there, the system. You put a massive amount more money in the system, right? You're going to get inflation. It's just as simple as that. Second thing was commodities. The commodity market did the biggest bull cycle we've ever seen in pretty much ever. If you look at where commodities were in the summer 2020 versus where commodities were by the summer 2022, it was a night and day difference, right? And the third thing that caused that insane amount of inflation was supply chain problems. And so when Russia-Ukraine happened, it negatively affected the commodities market in terms of a lot of commodities went up substantially in price because Russia is a huge player in the commodities market, which caused inflation numbers to get even worse. And additionally, it did affect some supply chains out there. And then you could say, well, then all the spending the U.S. government did, and other governments as well, on military equipment and things like that, that's almost like a form of stimulus, right? That money doesn't, just come out of thin air. Like at the end of the day, it's a stimulating effect. And so matters substantially. Now, you look at natural gas, for instance, here today. Natural gas is down nearly 7%. Oil's down, Brent's down here today, right? Why is that? Well, I'll show you exactly why. Look at this. The top 3 countries for the most valuable natural resources in the world are Russia, the United States, and Saudi Arabia. Should come as no surprise for anybody that knows anything about, commodities, energy market, things like that, okay? And so if Russia and Ukraine could wrap this up, right, and that ends, then Russia can slowly start to enter back into the global economy. And if you get Russia back more into the global economy, one, I think that's a safer thing for the world. I think by, kind of cutting off Russia more and more, I think it's going to be more dangerous for the world. But second, the more and more Russia starts to get back integrated in the world, the more we could talk about one of the 3 biggest natural resource players out there can get more in the market. And I think ultimately that means better things for commodity prices in general, right? Now, if you look at GSG, this is the commodity index that everybody should be tracking, right? This was that insane bull cycle, by the way. But as of today, GSG is lower than it was over 3 years ago. Over 3 years ago, there's absolutely zero inflation going on in regards to the commodities market at this point in time. So we actually have things going on in the positive direction. Additionally, if you look at gas prices, we're just looking at the United States gas prices. The current average around the United States is $3.17. Now, I'm sure some of you guys out there are paying in the twos. Let me know in the comment section if you're somebody out there that's in the twos right now, right? I would love to hear from you guys. But $3.17 is the national average. Year ago average was $3.59, so we're substantially under where we were a year ago, and we're a mile and a half below where we were 3 years ago. If you look almost 3 years ago, which was June of 2022, right? Right now we're in May of 2025. Almost 3 years ago, the average price for a gallon of gas was over $5. Over $5 average. That was ridiculous and insane, right? And so just keep in mind, this is a massive tax cut for the masses. Now, if you're a big baller, you make $300,000 a year. If you save $10 a week on gas, who cares? It doesn't even affect you at all. But you got to understand, for the bottom 50% of income earners in the United States of America, a cut like this over the past few years in regards to gas prices, it matters substantially. This isn't a small thing. This actually can add up to a lot for folks that are especially the bottom 50% of income earners out there, right? So let's do some math in regards to this. I know everybody likes some math, okay? So let's say you save $10 a week on gas versus what you were spending before, right? That's $45 a month, which is around, $540 a year or so. Listen, for a family that has, let's say, has an income of $50,000, that's pretty good. $500 extra in your pocket a year, that's good. Like, that's $500 more dollars you can spend. Maybe you can go on a, little vacation somewhere. Maybe you can, go out to eat a few more times in the year. Like, whatever. The moral of the story is, instead of that money going into that gas pump, it's going to be spent out there in the local economy, right? Which ultimately is a good thing at the end of the day. Now, this gets a lot bigger than this, though, right? Because we could just think about it on a consumer by consumer perspective and the masses, because keep in mind, people like myself that drive EVs, very small percentage of the population. The far majority of people out there, including people watching this video right now, you drive an internal combustion engine, you use gas, right? And so when you amplify this times, hundreds of millions of people, it's very impactful in terms of what it can mean to the actual dollar amount going out to the economy. But it gets even bigger than that. And here's why. How's everything transported? Well, everything's transported, I shouldn't say everything, but a great deal of the things out there are transported via semis, right? Trains definitely matter, right? Especially in regards to transporting commodities around. But let's be very, very clear. Like, go drive on an interstate sometime, you're going to see semis all over the place, right? This matters substantially for the trucking industry, right? Which also feeds back into inflation or deflation, right? So imagine, a semi-truck could hold around 300 gallons of gas, roughly, right? If you're paying $4 a gallon for diesel, that costs you $1,200 to fill up each time, right? If you're paying $3, you're at $900. There's a $300 difference, not a small amount. That's either $300 more in the trucker's pocket, right? Or the company's pocket, or less money the consumer has to pay, because somebody's going to end up paying that at the end of the day. And a lot of the time it ends up eventually falling back on the consumer, right? Now, let's say you're paying $6 for diesel, which is what we got up to kind of around 3 years ago, which was right around $6 a gallon for diesel. You're at $1,800. $1,800 to fill up your semi, right? So this is huge, huge for truckers, the trucking industry in general, absolutely massive, right? And by the way, I want to give a special shout out to all the truckers, because I feel like, you know, if 146,000 people see a video, I feel like 1,000 you guys are truckers out there. I've heard from so many of you guys over time. A lot of you guys are fans of the channel. You'll have it on when you're, you know, driving around and whatnot. So I appreciate all the truckers out there, and for, you know, transporting all the stuff we all buy all over the United States of America, because it doesn't happen without you guys. So we do appreciate you guys, okay? So now let's get into some good news for the bulls in regards to stock market, right? That was just kind of a little appetizer there. Now I got some better news for you. So big news came out Friday after the bell. Moody's ratings downgrades United States rating to AA1 from AAA, changes outlook to stable. So, oh my gosh, you know, people are like, oh my goodness, Moody's finally did it. They downgraded the United States of America. Oh my gosh. People thought this was going to be the end of the stock market. And I did a video on the reaction channel, what was that, yesterday? Right? I usually don't do Sunday videos, but I did a Sunday video on the reaction channel. And I never talked about this downgrade. People are like, how can you not talk about the downgrade? Oh my gosh, the market's going to crash. This is going to be horrible. And I'm like, I didn't talk about it because it doesn't matter. It doesn't matter. It's literally meaningless to the stock market. You got to understand, back in 2011, which I'd only been in the market a few years at that point in time, there was this huge event that happened. Standard & Poor's came out and downgraded the U.S. debt from AAA to AA+. And this was a huge deal. They talked about it on CNBC, I'm telling you. They talked about it for weeks straight. This big downgrade, if not months straight. It was a huge deal. Like, it seemed like every time I turned on CNBC back during that time, oh my gosh, they're talking about how the U.S. got downgraded. It was massive news, right? It was 14 years ago. That was massive news then. We all just been waiting for this. We've just been waiting for this, right? So when this news came out, by the way, this is another reason you guys want to follow me on X. If you don't follow me on X, you can certainly do that. That's in the description area, all my videos, if you want to follow me on X. Because a lot of times I can't cover everything on a YouTube video, right? But on X, I posted, I says, does this change my investing plan? Heck no. I don't care about this at all. The fact that the U.S. debt got downgraded by Moody's means absolutely nothing to me, and absolutely nothing to the way I invest. This is irrelevant, man. Like, S&P did this 14 years ago. We've just been waiting for 14 years for Moody's to finally do it. And at the end of the day, there's nothing new revealed. We all know the debt situation in the United States of America. We all know how strong the economy is versus the debt situation, right? We all know the GDP and the GDP per capita. Like, there's nothing new here. It's just Moody's did what they probably should have done 14 years ago, finally. And so you look at the stock market today, it doesn't care. The Dow finished green today. The S&P 500 finished green today. The NASDAQ finished green today. When S&P did that back in 2011, it was a drama market, man. Oh my gosh, people freaked out. Now, dude, we've been waiting for 14 years for this. 14 years, and they finally did it. We're like, we're already over this. The bond market's already knows what's going on here. This doesn't come as a shocking surprise at all. So people last night that were in my comment section, so how are you not talking about this? Is a huge deal. I'm just like, gosh, man, people got a lot to learn in regards to stock market here, right? Looking at the public count here today, I had countless stocks that were green, right? Fubo was up $3,000 today. Adobe was up $807. Amazon was up, Amazon was up $633. PayPal was up $435. EL was up $321. Elf was up $270. Google McDougal was up $195. Meta was up $144, right? And that's after Moody's came out and downgraded. It means nothing. It means nothing, right? Now, you've got to understand what's going on in the stock market right now. Because there's way bigger things actually going on beneath the stock market right now than Moody's in, doing what they should have done 14 years ago. And let me show you. This matters significantly if you want to understand what's actually happening with the stock market and where it's going. What I'm showing you in front of you right now is the newest AI investor sentiment numbers, right? Now, we're still in a process of bringing bears over to the bullish side. Now, this has been a process that's been going on for many weeks now at this point in time, and it's just continuing, and it's likely going to continue for a while. So even if we look at the latest data out of AI investor sentiment numbers, which I can't wait to get the new data here in a few weeks, 44.4% bearish, still an overwhelmingly high number based on historical average. Now, if you compare it to the 60% number it was last month, it looks like, oh, it's not that bad. But the historical average is 31% of investors are bearish on the market the next 6 months. We're at 44.4%. We still have so many bears to bring over to this bullish side, it's not even funny. The bulls are at 35.9% are actually bullish on the market the next 6 months. That's under the historical average. Under 37.5. So we're not even in a super bullish market yet. You could look at the price action in the market and say, dang, that's pretty bullish. But the sentiment's still not bullish. We have so many bears to bring over to this side, it's not even funny. Now, this is still going to be going on for a while. And that's the part of the process you got to understand. That's actually going on. We're in a process of bringing bears over to the bullish side. And that's going to remain like that, right? Now, with that being said, it doesn't mean every single day, every single week, or every single month is going to be up, up, up when you're in this sort of process. I take you back to 2018. This year reminds me more of 2018 than any year I've seen. It's insane, right? So in 2018, you had that major downfall in the market early in the year. And then you bottomed it out, right? The market starts to come back. Then it went back down to kind of like, almost touch those lows, but didn't quite get down that low, right? Then it comes back, falls a little bit more. Strong comeback, falls a little bit more. Strong comeback, and you bust through new all-time highs in the S&P 500, the NASDAQ, every index, right? It was a bumpy ride to new all-time highs, but at the end of the day, in 2018, we hit new all-time highs and actually busted through all-time highs, right? And then we obviously had a drama period late in 2018, which, could always happen this year, right? But the moral of the story is, right now we're still in a time period of bringing bears to the bull side. We're still in a time period of bringing folks that sold out of stocks massively in February, March, and April, bringing those people back to the stock market. Now that they're feeling a little better about tariffs and where things are headed, you get a wrap up in Russia with Russia-Ukraine there. Oh my gosh, huge for the market, huge for sentiment, right? Huge for sentiment. If you get a concrete deal between the U.S. and China, huge for sentiment. You get more and more concrete deals done between the U.S. and other countries, huge for sentiment. These things all matter substantially, man. And that's how you keep bringing more and more bears over the bullish side. And at the end of the day, you keep the momentum going, right? Now, as far as me and my investing process, right, I keep stacking the bricks. We keep building the brick wall bigger and bigger, stronger and stronger. And so all this stuff that's going on and what Moody's does and what Trump says and doesn't say and all this stuff, at the end of the day, I stay focused on controlling what I can control. And this is a very important thing I mentioned before we get into AMD and EL and cake here. Control what you can control. Control what you can control. You cannot control if Russia and Ukraine do wrap things up there. You cannot control when the tax deal gets done and how big the tax cuts are going to be. You cannot control how great or not great the U.S.-China trade deal is going to be. What you can control is researching great companies, investing in those great companies, and building your portfolio stronger and stronger and stronger. Week after week, month after month, year after year. Because that's what's going to be what actually changes your financial life for the better or for the worse. And you got to understand that. And so for me, I stay building, man. And it remains like that week after week, okay? Alrighty, next up here, let's get into some good news for AMD shareholders, and then we'll get into EL, and then we'll get into cake, okay? So, got good news for AMD shareholders. You ready? AMD to sell ZT Systems data center infrastructure manufacturing unit to Sanmina, I hope I pronounced it right, Sanmina for $3 billion. So AMD to sell ZT Systems U.S. headquartered data center infrastructure manufacturing business to Sanmia for $3 billion in cash and stock. As part of the transaction, Sanmia becomes a preferred new product introduction NPI manufacturing partner for AMD Cloud Rack and cluster scale AI solutions. Deal values include a contingent payment of $450 million. AMD retains ZT Systems rack scale AI solutions design and customer enablement expertise to accelerate quality and time to deployment for cloud customers. So, people were confused when this deal first came out. They're like, wait, AMD paid $5 billion for ZT Systems. Now they're selling ZT Systems $3 billion. No. They're just selling the manufacturing side of ZT Systems. So they're keeping the part that they actually want, which is the asset light side of the business, which is really the employees, the IP, right? All the patents and things like that, right? And all the know-how to actually do this. So it puts them on a much better, footing to compete with nvidia over the coming years. Now, the thing that with the ZT manufacturing side of the business, if they kept that, it would potentially slowly move AMD into more of a asset-heavy business, which was a kind of a fear from a lot of shareholders out there of like, are we going the route of Intel and becoming more asset-heavy? Because when you think about Intel's tried to play this kind of sweet spot of being like asset-heavy, but also they want to try to design their own chips and do all those sorts of things. You got to be one or the other in this space. In semiconductors, you either got to be a TSMC and you got to say, we don't care about creating our own chips and doing all that. We want to make the chips for everybody in the world. And we're going to do it better than anybody else can do it. We're going to outcompete them. We're going to be more cost effective, and your chips are going to be perfect every time, right? That's what TSMC focuses on. You look at other semiconductor companies like an AMD or Cirrus Logic, a company I used to own many, many years ago, or Skyworks Solutions, right? They are more like design houses. They're going to design chips for whatever specific applications they're trying to design these chips for, which keeps them asset light. Their specialty is their workforce and their patents and their relationships. That's what makes those companies special. Not the fact that they could manufacture, 100 million chips. Cirrus Logic, back when I owned that company back in the day, they were an audio company that made the audio chips, and I'm pretty sure they still do nowadays, for iPhones, right, and iPads and things like that. And it was a great growth vector for the company as iPhone was growing bigger and bigger over the years, and iPad back in the day, right? And so Cirrus Logic was a very successful investment of mine. But all they did was basically they just had a great relationship with Apple, and they would design all these audio chips to do exactly what Apple wanted. And much of their workforce was like dedicated toward Apple, right? And they had a lot of great patents in the space and things like that. And so AMD kind of does a similar thing, just obviously in a whole different marketplace than somebody like a Cirrus Logic or a Skyworks Solutions or somebody like that, right? And so they don't want to be asset heavy. They don't want to try to play that sweet spot of like, we're going to be a manufacturer of certain things and we're going to be a designer. They want to just focus on what they want to focus on, right? And so when I say you got to be one or the other, you either got to be an Amazon or you got to be a Shopify. Shopify, many years ago, back in like 2021, 2022, they were trying to play this game of like being an in-between, and they very quickly learned, well, we can't play that game because the stock went all the way down to $25. 25 bucks. Look at Shopify today, it's well over $100 a share, right? Amazon decided many years ago that they were going to go asset heavy, right? Like, we're going to have massive amounts of warehouses all over the world. We're going to have massive amounts of planes flying all over. We're going to have massive amounts of delivery trucks. We're going to have the biggest data centers in the world, the biggest cloud infrastructure in the world with AWS. It's all asset heavy. It's extremely expensive, but you can't compete with Amazon, right? And then Shopify is like, we're going to compete in a different space, but we're going to be asset light. And so if you look at Shopify, what makes Shopify special is its software. It's a kind of a SaaS play, right? What makes them special is their workforce, right? Their relationships with countless small companies, medium-sized companies, and even a lot of large companies as well. And so that's the difference, right? And so when I look at AMD, you got to understand, now I'm green in the stock up $7,900. This is still a strong buy, man. Like, AMD is still a strong buy here today. When you look at where this company's headed over the next several years, the way Lisa Su is positioning this company, there's no question that this company is still a strong buy today. And so, is it up a lot from the lows it was, a month and a half ago? Sure. But at the end of the day, I look at this stock over the next 3 years and I see a stock that, I don't think it's going to be even remotely close to $100 a share, which is where it's been trading recently, right? 114, 117, those are all joke prices, in my opinion, compared to where this company's going long term. So, yeah, good deal by AMD. Happy overall. I can't complain. About that, okay? Next up here, I got some good news for EL shareholders, and then we'll get into some good news for Cake shareholders. So, EL, by the way, Estee Lauder, this is a little bit of a misunderstood stock. A lot of people don't quite understand this one, and I just want to take a moment so you can understand this. Estee Lauder owns many of the most successful high-end brands in perfume, beauty products, makeup, cosmetics, those sorts of things, okay? And so I'll just show you some of the brands that they own here, right? And I understand like 90% of the people that watch my channel are men, so like probably 10% of the population actually understands these products or knows these products, unless you're a man who has bought makeup for your wife or your girlfriend or something like that in the past, or daughters or something, right? But they own a ton of different high-end brands. And go into a Nordstrom sometime, and you're going to see a Nordstrom's is loaded with these sorts of brands, right? And you can go into basically any major makeup store and you'll see their products. But a lot of them compete on the higher end. La Mer, for instance, very high end. I mean, we're talking about that's a moisturizer that is, like $600 for a 3-ounce bottle. Like, where there's different price points. And you might say, who
pays that?
People that care about their skin pay that have money, man. MAC, you look at, they're only really like, we can call it more affordable brand is The Ordinary, right? Too Faced has one of the top mascara products literally in the world. Now, if not the top, right? Now, you got to understand in regards to this company, they're doing mass layoffs right now, mass cost-cutting measures, and basically they're resetting the entire business model with a whole new cost profile moving forward. So when you think about the SG&A of this company, it's going to be monumentally different in 2026 and 2027 than it was in 2024, 2023, and in past years. Okay, so they're resetting the entire cost profile of the business, which is going to reset the margin profile as well. And if you're wondering, is it going to reset it higher or lower? It's going to be higher. And the question is how high? It's going to be substantially higher. When you look at how many thousands of employees are cutting, it's very, very substantial here. Now, in my opinion, here's how this game is going to play out, okay? So what I believe is going to happen here is revenue growth is going to start to go back up in the second half of this year. This year. I'm not talking 3 years from now, 5 years. This year. I think we're going to start to see revenue start to increase again in the second half of the year. And that's going to keep increasing all the way through into 2027. So 2026 is going to be another major reacceleration of revenue growth into 2027 as well. Okay, so 2026 and 27. Then we're going to additionally see margins go up substantially. When I say margins, I'm talking about gross margin. I'm also talking about operating margin. I'm also talking about net margin. Those are all three different margins, okay? And so we're going to see that, in my opinion, starting in the second half of this year. Not 5 years from now, not 3 years from now, starting in the second half of this year. And then you're going to really see it accelerate in 2026 and 2027. It's going to be insane. And we're going to see an earnings per share explosion in 2026 and 2027 for this company. Like, it's not even going to be on the same level. It's going to be ridiculous. People are going to be shocked by the earnings per share that starts pouring in this company in 26 and 27. They'll be like, what the heck? And so I have even more good news for EL shareholders. Here it is, okay? Listen to this. This is big. Michael Burry, the man who got so famous from The Big Short, right? Very, very famous from that. Michael Burry did something very interesting. In the first quarter of the year, now first quarter is January, February, March, okay? He sold his entire portfolio. He bought a ridiculous amount of put options on nvidia stock and China stocks. And he purchased one stock out of the thousands of stocks he could have bought. What's the one stock he buys? Estee Lauder. He purchased 100,000 shares of Estee Lauder. And I think he already had 100,000, so he might have 200,000 out. I'm not 100% sure on that, but I think he did, if I recall. Like, I got a lot going on up here, okay? Now, this is fascinating because here's the deal, okay? If Michael Burry bought those puts on NVIDIA in, let's say, January, February, oh my gosh. And let's say he cashed out in April, he had to make crazy money on those put options, right? Same thing with China stocks as well. Like, he had to cash out with some crazy, crazy profits if he did that, right? Now, if he's still holding those puts, he's got destroyed on them. But as long as he got out in those first few weeks of April, which we can't see that data, obviously, because the quarter ends in March. If he sold those in those first few weeks of April, oh my gosh, when the VIX was spiking like insane and NVIDIA stock was crashing, the amount of money he would have made would have been ridiculous. Like, he would have easily tripled, quadrupled, if not 10x his money in that particular time frame. It just depends on his timing, right? But once again, like, for him to buy the only stock he sees as attractive is Estee Lauder, I think that says pretty good things about where Estee Lauder's future is going here, right? Now, a great pair investment out there, and I've been talking about this one for a while, is buying EL stock and buying ELF stock. And if you're wondering, does this still work? Yep, still works. And I posted the entire, which is another reason why you want to follow me on X, because sometimes I'll just post random stuff. I actually posted the entire public account on X, on Friday, right? And this is a great pair investment, man. You buy a EL, you buy ELF, and then you get the ELF exposure, which is exposure to the masses, low dollar amounts. Like, ELF's products are usually $5, $10, right? And then you get exposure to the high end, which EL owns tons of the high end. They got a huge market share in the high end business, right? Which is really selling products that are really $50 plus. And a lot of EL products go well over $100, right? That's a great pair investment, in my opinion, on two beaten down dog stocks that I think are going to perform very well for the next many years, right? So just my 2 cents, okay? All right, next up here, let's get in some good news for, before cake, I do want to mention something in regards to Wynn Resorts. For any Wynn shareholders, Wynn got good news today too. You know what the good news is? They're exiting the bidding process, or they're not interested in doing the New York City property. Listen, New York City property could be great, but New York City does not appreciate what a property like Wynn would do. My opinion is they think they're too good. My opinion. New York City thinks they're too good for the Wynn. Making a big mistake. Big mistake. Like, Wynn is such a match made in heaven, man. To have a Wynn in Manhattan, crazy. Huge loss for New York City. Not a huge loss for Wynn. Like, Wynn's got so much land all over the place. They got other countries they can do deals with. They're fine. But anyways, that's good news because Wynn was going to spend a fortune on that. And I don't know if New York would allow them to even make any money. Like, New York probably would have just robbed them blind with tax dollars. So anyways, my 2 cents on regards to that. Okay, next up, Cake. So Cake, I went to Cake, the Summerlin location, back on Friday night. Was there about 8:30. Place was jam-packed. Kitchen was busy. The outside and the inside, jam-packed, man. Great to see. They're working back there, man. They're working. Additionally, we had a North Italia and a Flower Child open up here in Vegas. It was a few months ago now at this point in time, okay? And I wanted to see how reviews are doing for both of those locations. They're in Henderson, which is basically just a nice suburb of Las Vegas. And North Italia has 381 reviews now, gets a 4.6 stars on OpenTable, so great to see. And then the Flower Child has a 4.5 stars, 129 reviews there for the Flower Child. So they get phenomenal reviews because the food's delicious. The food's delicious at those places. Absolutely phenomenal. It's different than the Cheesecake Factory. The Cheesecake Factory makes very okay food, is a way to describe it. Like, Cheesecake Factory gets a 3.5 stars, right? North Italia and Flower Child make great food. And so, like, before I even owned Cake Stock, I went to North Italia, I went to Flower Child, and I thought they were just like really well-run mom and pop restaurants that just had a lot of money behind them and to build these locations. I didn't even realize they were built by Cake at first. And then when I found out that, I was like, oh my gosh, like, they're operating on a different level than kind of, the Cheesecake Factory itself. Like, I challenge you guys, go to North Italia sometime, go to Flower Child sometime. Flower Child's phenomenal. Flower Child's more in that, we can call it $10 to $15 bracket. North Italia is more $20 plus for an entree, but both of them are absolutely delicious. Flower Child's super healthy as well, right? And in regards to Cake Stock, listen, this stock's still a buy. Looking at the forward P stock, thinking about the growth rates this company's going to have for the next number of years, thinking about how many expansion opportunities they have for North Italia and Flower Child over the next decade, and then thinking about their other concepts coming behind those, like, it's a banger, man. It's an absolute banger of a stock. Pays me the dividends every quarter as well. So I get to make money in the stock for just holding the stock, and then I make money for all the dividends they pay. It's beautiful. It's beautiful, man. And every time I get to go to a North Italia or a Cheesecake Factory or a Flower Child or a Blanco, man, I feel like I get to eat for free because they pay me out so much in dividends and I make so much on the stock. It's like beautiful. I get to go to all these nice restaurants for free, man. It's the life, okay? All right, guys, appreciate you joining me as always. Thank you so much for being here. I appreciate each and every one of you. If you're looking to take your investing game up to a much higher level than where you're at and join a network of higher net worth investors, right, which is my private group, there'll be pinned comment down there. Click on that, fill out a form, see if we can get you access to that as well as access to all my library of premium courses. Much love and have a great day.